Everyone, I wanted to bring attention to this document produced by the Forest Service in conjunction with universities, the University of Georgia and the University of Florida in this particular case. But the tax tips for forest landowners 2022 tax year. And I'm just going to highlight some of the information here and provide some basic information about forest land tax issues and timber tax issues. And today I'm going to talk about the classification of your forest ownership. And so we can zoom in, and many of you may already be familiar with these classifications, but in general there's three categories. There's hobby, often referred to as personal use, investment, and then trade or business. And within business there's two, I guess you could say, subcategories: material participant and then passive. So today I'm going to briefly address the importance of these classifications and maybe some ideas of how to help you select which one is best for you. So to me, the Internal Revenue Service, the IRS, is in the business of taxing income. Income can be defined as profit, the amount of revenue received minus any cost incurred in generating that revenue. Hence, in many ways, we just described capital gains, the difference between some revenue received and the tax basis. The IRS taxes the gain from a capital investment. Stated differently, a capital gain is the revenue minus the capital investment. And as I've already mentioned, there were three quote-unquote tax classifications for the federal IRS: hobby, investor, and business. And often hobby is referred to as personal use, investor is referred to as investment, and business as trade. Beyond that, business, as I've already mentioned, actually has two of its own classifications. First, material participant, and then second, passive. And in my opinion, there are three very important concepts, or words you could say, in relation to a timberland classification. The first one is profit, capital investment, and then the third is time. So what is a hobby? To me, a hobby can be defined as an activity done regularly in one's leisure time for pleasure. In terms of timberland classification for the IRS, a hobby forest is one in which the landowner conducts very little activity to generate a profit. Essentially, they own the timber or land merely for hobby or for personal use. They may recreate in it, for example, hiking, fishing, bird watching. They may hunt within it. They may even cut firewood down from it for themselves or even their family or neighbors. But notice none of these activities were conducted to generate a profit. A key point in order to be classified as an investor or business is the intent to make a profit, or you have a profit motive. You are investing some amount of capital, usually money, to generate a profit. Notice the hobby classification land is not investing any money or capital to make a profit. Beyond that, they are not really spending any time to make a profit. They may spend some time working on the property, but none of the effort of work is to produce a profit. The other two, an investor or business, both have a profit motive from their timber. An investor differs from a business mainly in terms of the amount of time spent or money invested, or their amount of capital investment to generate a profit. An investor wants to make money from timber sales, for example, but doesn't want to spend a substantial amount of time themselves to do any improvements to the timber or land, or they don't want to pay someone else any substantial amount of money to do any improvements to the timber or land. However, someone classified as a business is spending a fair amount of time to conduct their business. A business classification means you essentially are using your timber as a business. And timber production is somewhat of an odd duck, you could say, because the factory itself is the product. Some agricultural plants are similar, right? But many are not. Take fruit trees, for example. The tree produces fruit, but for the most part, the fruit is picked from the tree and the tree remains. However, with timber, the stem is cut down and the tree is essentially permanently removed. So back to the business classification. There are two subcategories of business, as I've already mentioned: material participant and passive. Elected annually, these classifications differ in terms of the amount of money and time invested during the business activity, or the amount of money and time invested to produce a profit. Hence, there are some differences in relation to the gain and capital resulting from a capital investment between the two classifications. Being a material participant provides the most advantageous benefits from IRS deduction provisions among all the classifications. However, remember, in order to obtain the provincial benefits, one must invest a lot of capital and time. And you must invest a lot of time, too, recording all of your activities, because the federal government is more interested in documentation that you are an investor or a business or materially participating rather than you just simply stating it. And you may wonder why the federal government would give preferential treatment to certain landowners. And this is just my opinion. Often with taxation, much of it is interpretation. But to me, the federal government, who at least conceptually represents us all, right, wants you to invest in your business. If your business, whatever it may be, is generating a profit, producing a revenue, it must be producing a commodity that the public wants, else it wouldn't produce a revenue. Your profit results in a tax base, right? Likely results in multiplier effects to society, e.g. a forester, loggers, mills, retail store workers, doctors, perhaps lawyers. And we can speak in terms of forest. The forest likely results in societal benefits such as cleaner air, water, wildlife habitat, perhaps aesthetics for others. Beyond that, a business generating income or revenue reduces welfare and likely contributes to reducing poverty in your area because of the multiplier effects. Timber and wood are a raw natural resource in demand across the world, hence there can be political power for those who possess it. And many countries do not have this raw resource, or at least at the amount that we do here in the U.S. Hence, in many ways, it is to the benefit of the IRS and federal government that a landowner invests capital to produce a productive forest, to produce a
profit. And that profit is a tax base, a source of funding at the federal, state, and local levels and associated agencies.